So let's talk about how to get rich in 2023. We'll take several steps on how to do this, and it'll take patience and mindset. So stay tuned. So the first thing you have to do is you can't tell anyone about your plans because people will throw off your ambitions. So and that happened to me because I always get very excited about my goals and ambitions, and I share it with people, and usually for me at least, I got a lot of hate. I lost a lot of friends, and the people that are mostly trying to stop you are your close family and friends. So don't depend on your close family and friends to help you with this journey. So through this journey, we have to first identify liabilities and assets. So a liability that takes money out of your pocket, it can be your clothes, your purses, your shoes. It can be, just simple entertainment. A lot of applications that you usually don't use anymore and you don't even know you have them. It can be, even your house. If you don't make money on your house, it's just a liability. If you bought your house at all-time highs, prices are not going to return that quickly. So it might be just a liability for you. Your car payment is a liability. Your credit card payments are liabilities. Now, an asset is the opposite. It puts money into your pocket. So one of the things that puts money into your pocket is, let's say, you buy a house and you're renting out a room or two, which means, you don't have to pay as much on your mortgage, or you're living for free. So that's an asset. And then later down the line, you can actually sell that house and it's gonna be your profit. An asset can be your stock account, your stocks that you're buying and selling. An asset can be a car, if you're using it for work. If you're an Uber driver or you're a Lyft driver, that's an asset to you because you make money with it. It puts money in your pocket. So everything that puts money into your pocket is an asset. So the first thing you have to do to start all this is put some cash aside. If you don't make so much enough money in your work, you have to look for a side hustle. Put some money into a savings. You still need your savings account, your emergency account, but have a separate account just for investments. So right now, you just want to save up money. My prediction is that this market is not going to get any better for at least another year. But that gives us the opportunity. So put money aside, put money into a savings account with the intention, you can't touch it, with the intention that you're going to buy an asset, whether that's a stock, an ETF, anything in the market, or if it's a real estate property. So right now, real estate property is slowly coming down in price, and your local real estate agent and your banker will probably tell you that it's not gonna go down, this is it. But you have to understand, these are business people that are trying to sell something. However, make sure that you're waiting long enough for the real estate to come down. And of course, we never know where the bottom is, but it's all about supply and demand. Now that interest rates are really high, there's not as many people buying anymore unless you have some really good money on the side. There's still investors coming in buying property. That's just to put their money somewhere. And but other than that, the supply is going to be way higher than the demand. And you can see already, at least here, I live in Las Vegas, I can see construction sites slowing down. They're not building as much anymore. So there you go. So I read several blogs on this subject, and a lot of them say that the market's not coming down at least until next year in May. But it's probably going to take longer than that. If the recession lasts for a year, or like some say 18 months, then market prices are going to go down with the recession. And so I'm looking forward to maybe buying a piece of real estate and just for rental. In Las Vegas, we have different laws for the Airbnbs to protect the hotels. So it's a little bit difficult to have an Airbnb in Vegas, even though they make more money. But a rental property would be nice, an asset. So the most passive way to make money in the market is buying ETFs. You know, an ETF is a big amount of different companies combined into an ETF, into a fund. That's probably one of the safest ways. You're gonna get good returns, but probably not as good as if you're investing into a stock. But it takes the pressure off of your mind. It takes that anxiety out that you see your portfolio going down dramatically every day, like we're doing right now. But yeah, you can have an exchange-traded fund that has all that mirrors the S&P 500. VOO would be one of these. You can have Vanguard has really great rates on their ETFs. They don't have a lot of fees. Another one is VTI, and it includes the whole stock market. You can have a growth stock, technology or biotech. ARK Invest has a lot of these. You know, you can invest in any of these. You can have a dividend ETF, which pays you dividends. Of course, when dividends get cut, then of course those dividends get lower too. But you know, there's a lot of passive things that you can do. Passive investments. You know, buy a couple of shares whenever you can, and then just wait it out, because eventually the market will return. It's just a matter of time. So everything else you're investing in the market, your stocks, your ETFs, your crypto, dollar cost average. So whenever you see them drop, we don't know where the bottom is. We really don't. Nobody does. Nobody has a crystal ball. So make sure that that your dollar cost average, and that just means whenever it drops, you buy. It drops more, you buy. It drops even more, you still buy. You just have to make sure that it's quality. You know, don't buy any crazy coins they're just coming out with. Don't buy these little companies, penny companies, any of that. Don't do any of that unless you're trading. If you're a trader, of course, this is probably the opportunity when the market is really volatile. So you can make profit on the up and downs in the market. You really don't care about the fundamentals. But if you're going for long haul, which has really the best return, then go and buy dollar cost average and buy a few shares. And then it's just a matter of waiting it out and being patient. Nobody can time the market, so we'll just have to wait it out. Some of them you might be lucky. I was lucky in the past a few times where I timed it on the bottom, but that was just it's pure luck, honestly, because nobody can time the market. But it's really important that you stay invested in the market, especially through this time. So sometimes the media will tell you, like, it's over, this is going to be another depression. You know, well, they're looking for views. So all you have to do is put your fingers in your ears and close your eyes. So, of course, when the real estate market falls, you want to be ready and have some money to invest. Now, if you have a good amount of money in your stock portfolio, you can get a loan against that stock portfolio. It's an asset. It's something that the bank can take from you if you're doing that. So that's what they're looking for. They're looking for some kind of asset in return of giving you money. So you can use that stock portfolio to get a loan to buy a property. But remember, when you're buying a property, it should be something that you make money on. So if you're living in that property, make sure you have another room to rent out so that your mortgage is partially paid or fully paid by someone else. So right now, your active income is your job. You're exchanging your time with money. So every time you go and buy something, let's say you're buying a purse for $500, something ridiculous. Just remember, what is your hourly wage and how many hours did you have to work for that purse? You know, I see people, and I don't do things like that. I'm too cheap. But I see people with the eyelash extensions. That's $200 every 2 or 3 weeks. That's too much. All these things that can go into your portfolio, that can go into an ETF that makes you money down the line, that helps you retire comfortable. So the next one, of course, is your passive income. So you can build a product, you can build a course, you can build an application, anything you can do, anything that you're providing online that's required by people and people buy and pay on a monthly basis. There's the possibility you can write a book and for free and post it on Kindle and people will buy your book. So, and that's passive income because people will buy that book 10 years from now and you can make money on it. So just remember that anything that you don't have to exchange your time for is passive income. Let's say your dividend stocks. Your dividend stocks pay you dividends, that's passive income. Compound interest gives you money without the exchange of time. So all of these. Of course, then your rental income. Your rental property will make you passive income. Somebody pays to live there. That's passive income. Most millionaires, I always read this, have 7 sources of income. Some have more, some have less, but you need to have at least 3 or 4 sources of income and to be able to make it. And they have to be, most of them have to be passive because there's only so many hours in a day. And you're gonna work yourself to death. If you think you can work and save yourself into wealth, you can't. So just remember, don't tell anyone about your ambitions and your goals. Don't tell anyone about it because people will change your mind, they will change your ideas, and that's not good. So the second one, save money now. Put some cash aside. You have time. Don't think you don't have time. I don't have time anyway, so I'm just gonna spend it. Don't do that. Save money because your opportunity will come, okay? So save money, put it aside. I have several accounts. So one of my accounts is on Robinhood and they're offering 3% interest on unused cash. So if you don't want to just put it in a savings account, then I'm with JP Morgan. They pay me 0.02 whatever percent on my investments. It's like nothing. So Robinhood pays you 3% right now. That's what they were advertising. So you can do that. Doesn't mean that you have to use that cash. If you don't want to use that cash and you need it for an emergency, it'll cost you a fee, but you can take it back out. Make sure that you're saving your cash, you're saving money right now. Wait for an opportunity come up. Your favorite stock, you average in. That's the third one. You average into your favorite investment. Don't implode all of your money into one stock. Use small little segments and dollar cost average into them. Because we don't know where the bottom is. Timing the market is impossible. Nobody can time the market. Cryptocurrency, if you have a quality cryptocurrency, it will come up. Crypto goes through these cycles where it loses crazy amount and then it goes up. It's the stair stepper, like everything else is a stair stepper. That's how our economy is. This is how our market is. So dollar cost average into your favorite investments. When you see them extremely in the red and it's a quality investment, don't just stay away from it. I'm gonna wait until this is better. I hear this all the time. Go get some money in there. Don't invest everything, but buy a few shares every time you see this happening. Don't listen to the news. Don't. They are going for views. All they want is views. So don't listen to them. And make sure that you save enough money or you have enough in your portfolio you can get a loan against. So you can borrow money on that. And if you are buying a real estate property later, that's a tax write-off because now you're creating debt, but it's good debt. There's a difference between good and bad. Bad debt is your car payment, your high interest credit card payments. That's bad. Good debt is something you can take off your taxes, something that makes you money because now somebody's renting that property and that's money in your pocket. Even if it pays for your mortgage, it's still money in your pocket because you don't have to pay for that mortgage. So, and then of course, be patient. It's always about being patient. I know Warren Buffett has this saying is money goes from the impatient to the patient. And it is so true. Just stay in there, stay long enough. I made the same mistake like everybody else. I was impatient. I sold some of my really high quality stocks because they didn't move for so long. I was so frustrated, I just sold them. And now I'm like, holy cow, I should have stayed in there. But I think that happens once or twice to everybody. In the beginning, we always want to be rich by tomorrow. And so sad to say that, but it doesn't happen like that. Unless you win the lottery, and how many people really do. So, I hope you like this video. And let's just do it. Let's do this. This is our one chance to make it. Let's do this. You might have to wait 5 or 10 years to get into that wealth and prosperity, but it will happen if you are following your steps. All right. So thank you so much. This is Claudia. I will see you in the next video. And don't forget to put a like on this video and subscribe to my channel. Thank you so much. Love you guys.